Hi everyone, this is the Focus Spender, and today I'm going to be talking to you about how to get started with investing on a small budget using ETFs. But first, if you're new to my channel, I would love for you to subscribe. My channel is all about getting out of debt, staying out of debt, organizing your personal finances, and increasing your net worth. So let's get started. So there are many different ways that someone can get started in investing, and there are many different types of investments that you can purchase. And now if you are a new investor, you can be feeling a little bit overwhelmed. You don't know, should I buy stocks? What stock should I buy? Should I buy ETFs? Should I buy a mutual fund? Should I do a Roth IRA? Should I do a traditional IRA? What is an IRA? There's so many questions that you might be asking yourself, and I'm here to just tell you, okay, breathe, step back, and start with an ETF. Stocks are fun. Stocks are great, but I personally think that until you know a lot more about the stock market, until you feel a lot more comfortable, it does not make sense to start with one stock. To get the most bang for your buck, you definitely want to start with an ETF. And I'm making the assumption that either you already have a 401k or a 403b, or you just don't have the option to do one, or you already have an IRA with your job or outside of your job. So this video really is for the person that wants to learn about how to get started investing outside of their retirement accounts, just to be clear. So like I said, my suggestion is to start with an ETF. But what exactly is an ETF? An ETF is an exchange traded fund. It's basically a group of stocks that track a particular segment of the market. It could track retail stocks, it could track tech stocks, it could track real estate. Or it could track the entire stock market and be based off of the S&P 500. Now, the beauty of an ETF as opposed to a mutual fund, which is pretty similar because a mutual fund is also a group of stocks and bonds, is that there is a very low barrier to entry. An ETF share could be $20, and you literally can buy one share of that ETF for $20 and boom, you're an investor. Whereas with a mutual fund, a share could be $20 as well, but there could be a $1,000 minimum investment, which is actually pretty low. A lot of times I've seen minimum investments at $3,000, which can be really hard if you're just getting started out to come up with that $3,000 to invest. So now thinking about how much should you invest and how often should you invest? I would say that if you're just starting out, you can start with $25 a week or $50 a week or every other week, whatever is most comfortable for your budget. I would not suggest as a new investor, like a young new investor, should just start throwing money at your investment. Just because you might be a little bit more risk averse and you may not understand or may not feel comfortable with the dips in the market. I've seen so many people that have commented on my videos saying, I invested $500 and now I lost all my money. And I'm thinking, you didn't actually lose all your money. You didn't lose most of your money. The price just went down, and the price is going to go back up eventually. It may take a little bit of time, but it is going to go back up eventually. So if you're just starting out, until you feel really comfortable in your decisions, I would start with $25 or $50 every week or every other week. And that can still gain you a lot of money in the long term. I just looked up how much would you have after 10 years of investing $25 a week with an average rate of return of 8%, and it said about $20,000. And if you do $50 a week, for the same 10 years at 8%, you would have about $40,000, and in the bank that would just be $26,000. So you're still doing something even if you're not investing a ton of money. Now, where can you buy ETFs? You can buy ETFs from a whole host of places. You can buy it from E-Trade or a company like that has the full gamut of investments and funds available. You can buy it directly from the company that's making the fund, like Vanguard. So Vanguard is an investment firm that, they make their own packages of mutual funds, they make their own packages of ETFs, and you can buy directly from them. They have really low fees. It could be a little bit overwhelming because the amount of options there are is huge, and so you have to do that work to figure out what it is you're going to buy. You can try a company like Betterment, which I've used for years, and I've also used Vanguard for years. But with Betterment, you just tell them what your goals are, and they pick the ETFs. They pick multiple ETFs for you, and they invest your money. You can try M1 Finance, which is a company that I just started to use about a month ago, or actually only a few weeks ago, and you can, search for different ETFs there. So how do you pick the ETF that you want to invest in? Honestly, Google. Google is your best friend. Anytime someone says, well, what do I buy? How do you think I figured out what I wanted to buy? I literally Google, because I am not a money manager. I don't make bundles of ETFs. So the only way I can figure out what I should be investing in is doing a lot of Googling. I Google best ETF 2018. I Googled, S&P 500 ETFs. And one of the options is VOO, which is a Vanguard ETF for the S&P 500. So Google is your best friend. The things you should be looking out for when you Google is you're looking for the expense ratio, you're looking for the rate of return for this year. So if you see a fund has a rate of return of 4% for 2018, you might, especially because this was such a good year in the stock market, you probably want to step away from that. You want to see something that's at like 10, 12%. 12% would actually be really high, but you want to see something, much higher than that, so that you can feel a little bit more confident that it might perform well next year. Honestly, we don't know what the future holds, so we don't, just because it's performed well in the past, we don't know that it's going to perform well in the future, but we can feel a little bit more comfortable. You also want to make sure that the expense ratio is low. Like I said, 0.04% for Vanguard is extremely low, but you can pick something that's at 0.5%. I wouldn't go as high as 1% because there's so many cheaper options, but that's something to consider. One time someone at an investment company tried to sell my mom an investment, and I asked them, well, how much is the expense ratio? And he looked me in my face and said 6%. And I said, okay, great, thanks, bye-bye. So you just want to make sure that the expense ratio is low, because you really want to keep all of that money back into your investments. An expense ratio that's too high will basically just lower the amount of money that you have left in your investment in the long haul. So that's about it. That's my tips on how to get started in investing with a small budget using ETFs. If you like this video, be sure to click thumbs up and share it with your friends. You can also follow me on social media, on Twitter, Instagram, and Facebook at Focus Spender. Thanks for watching. Bye-bye.